ladies and gentlemen. Looks like we're live here. Sorry for the slight delay. Had to correct the Twitter feed. Anyways, or X as they say. Bank of Canada announces a rate cut this morning, another quarter point. I was hoping for 0.5%. I got to say, I was on a show yesterday called Rein It In. If you haven't checked that out, go to YouTube, the Real Estate Investment Network, and go look at a show called Rein It In. We were talking about, I was hoping for a 0.5-point rate cut. I think the Bank of Canada wants to get ahead of this thing, but we'll see. What they did do was a quarter-point rate cut. So now that they've done a quarter point, what is the effect on investors? Really, if you're watching this, the odds are you're a property owner, you're a real estate investor, you either are currently a real estate investor or you want to be a real estate investor. And the question is, what impact does this rate cut have on you and your real estate portfolio? And the fact is that from a fixed rate perspective, if you're in a mortgage and you have a fixed rate, this is going to have very little effect on fixed rates because fixed rates are determined by bond yields. And if you look at bond yields, and you know what, let me put this up on the screen here. And this is the first time I kind of go live through this platform, so I may be kind of going through this a little bit, but let me just show you right here. You could see here, there you go. You can see the 5-year bond yields are down to 3.265% right now as of today, but you can see they've been as high as 4.35% in October, November of last year. That's where the bond yields were. This is how fixed rate mortgages are determined. It's from bond yield. So if you're sitting there with a fixed rate mortgage, and I was talking to a couple brokers, friends of mine, and they're saying every single day people ask us, what's going to happen with our mortgage? If you're in a fixed rate mortgage, the rate cut means nothing to you, not on the mortgage side of your balance sheet, but it does have an effect on your line of credit. And I'll speak to that in a second. But really, again, back to the question is, how does this affect you as a real estate investor or a property owner that wants to perhaps be a real estate investor? Maybe you want to try to build an accessory suite. Maybe you're interested in building a coach home one day. This is our specialty here at Visture Property Group, as we build coach homes, we build ARUs, ADUs, we build basement suites. We turn property owners into real estate investors, and we help them do that. And we operate from Oshawa to Peterborough to Lindsay, Aurelia, Hamilton, as well as Barrie. So the point is this, how does it affect you? Well, first and foremost, my belief is that there's quite a bit of pent-up demand in the system right now. And what I mean is there's a lot of people waiting to do projects. There's a lot of people that are on pins and needles, and it's too expensive to do things right now because their lines of credits their lines of credits went from 2% interest rate to 7, 8, 9% interest rate. So now those lines of credits are starting to come back. And this quarter point drop has a direct effect on lines of credits, credit cards, and other lending facilities. Not necessarily fixed rate mortgages. It does affect variable rate mortgages, not fixed rate mortgages, but that has, over time, you will see this trickle effect through the market. And this is going to help people that need to rely on lending facilities in order to do construction projects and real estate projects. Those of you that want to add accessory suites, basement suites, coach homes, whatever the case may be, if you're leveraging your line of credit to do that, this will help you because that quarter point drop will lower the cost of borrowing by at least a quarter point. Now they did a quarter point drop last month, another quarter point drop today. That's now 0.5 point. If they do it again and again, and they're expecting another several of these rate cuts before the end of the year. So what this does is, yes, it has a meaningful impact for some people. For others, it makes very little impact, especially if you have a fixed rate mortgage, makes no impact on you. But what I will say is this meaningful impact, even though it might only lower your debt payments by a few dollars every single month, maybe $20, maybe $50, maybe $100, even though that has not a crazy impact, it does really start to impact confidence because people know that we are now at the top of the rate cycle and we are on the other side of it. And as a result of this, the confidence is starting to come back into the market. Now, this is going to take time. It doesn't happen overnight. It didn't go from low confidence to super high confidence. Remember, like 2 years ago, nobody could do no wrong in the real estate business. And as a result, people's confidence were at all-time high. Well, it didn't get there overnight. It took time to get there. Now for the last 2 years, we've been going on the other side of it. We've been going from really high confidence to extreme low confidence. Now we're starting to build back up. That's what's happening here. So I really like this quarter point drop for a couple of reasons. Number one is we are going in the right direction. It's confirmation to everybody that we are going in the right direction. People are going to love that. There's no doubt about it. Number two, it is going to slowly release the pent-up demand. That's what I mean. This quarter point rate drop is going to open the tap, but slowly. And this is important because I believe that the Bank of Canada is really, really, really afraid of the pent-up demand in the system, which is why they waited so long to lower interest rates. They've been waiting to the 11th hour until the precipice of a crash in order to bring those interest rates right down. And the reason is because they know there's a lot of pent-up demand. There's a ton of people, and I know them personally, and you know them, you're probably one of them, that you're just waiting for those interest rates to come down, and boom, you're getting in the market. You're either going to buy another property, you're going to build a suite, you're going to get deeper into the real estate market, and they know that. This quarter point rate drop, what it does is it allows us to open up some of that demand without going crazy. Because if that pent-up demand slams into the market and drives up prices like crazy, for some of you real estate owners, you're going to love that because you own a lot of real estate and you're going to think this is great. But then they're going to be forced to react. They, as in the Bank of Canada, they're going to be forced to bring rates back up, and they're going to be forced to be aggressive again. We don't want that as investors. We want a nice, normal market. We want slow-moving, nice, normal market. That's what we want. That's what you want. In case you don't know, that's what you want. That's what you should want. So this quarter point drop unleashes a little bit of the pent-up demand, but not too much. So I really like that. Meaningful impact on lines of credits, meaningful impact on some lending facilities, not a meaningful impact on all mortgages because most mortgages are fixed rate. Most mortgages are derived from bond yields, but definitely it is having, in the terms of confidence, you're going to start to see more and more confidence. And I do believe, and I know that I think they did this. I think they knew they were doing this in the summer because the summer from a real estate investment perspective, yes, there's a lot of homeowners that are shopping at this time. July is normally not a crazy month for real estate sales because a lot of people are on vacation. A lot of people are like, listen, I'll look at this in the fall. You know, the spring market is huge. The fall market is not as big, but it's bigger than the summer market, let's say. And the reason for that is a lot of people on holidays. A lot of people are on their decks or at their cottages. They're on the boat. They're having a beer. They're chilling out. And they're not necessarily interested in going, head deep into real estate right now. Some of us crazy people, like us at Visture, we're right now actively managing, I think, almost 24 construction projects that are all related to solving the housing crisis and helping real estate investors add supply to the market. So some of us are in it deep right now. But I will say that this confidence, I expect it will build through the fall. I think you're going to see another couple rate cuts. And I think as the fall hits, that confidence is going to keep building and building and building. And I do think it's going to be a bit of a snowball effect where into the fall and into next year's spring market, I think you're going to see a very different market. So it's a good thing. And even though, and there's a lot of people that are going to say this is a nothing burger. And I agree, it doesn't have a huge impact today on the market. I get it, but it's going in the right direction. And that's a really good thing because for the last 2 years, we've been going in the wrong direction. Many of us have felt, and I feel that now we're at least heading in the right direction. So those are my thoughts. Excited to see the new confidence. I can already start to feel it. I have phone calls with real estate investors every single day. That's what we do. We help real estate investors manage their properties, elevate their cash flow, elevate their portfolios. That's what we do at Visture Property Group and Visture Property Management. So I speak to these investors every single day, and I can see that the confidence is coming. It's getting better and better and better. So hopefully your confidence is getting better. If you have any questions, feel free to reach out to us. Check out our website, visture.ca. If you want to have a call with us and have us evaluate your portfolio and give you an assessment of where your portfolio is and where it could be, then again, reach out to us at visture.ca. Get in touch with us, and we'll be happy to help you. That's what we do at Visture is we're trying to help to solve the housing crisis by adding supply to the market, and we do that working with amazing investors like you. So thanks for watching. Hopefully this has been good. I hope to do more of this stuff now that we got a phenomenal team at Visture, and because The projects are all handled. I hope to do more of this stuff. So hopefully you like this, share it, and put any comments below. I'd love to hear from you, and I'll engage as much as I possibly can. Have an awesome day. We'll talk to you guys soon. Thanks for watching.